Welcome to our beginner's guide on cryptocurrency investing. Today, we will walk you through the basics of getting started in this exciting investment space. Step 1. Understand what cryptocurrency is. Cryptocurrency, also known as crypto, is any form of currency that exists digitally or virtually. It operates independently of traditional banks or central authorities. Instead, it relies on a decentralized system to record transactions and issue new units. Step 2. Learn about the most popular cryptocurrencies: Bitcoin, Ethereum, and Litecoin. CoinMarketCap reports that there are approximately 22,932 cryptocurrencies, with a total market capitalization of $1.1 trillion. Bitcoin and Ethereum are the two largest cryptocurrencies by market capitalization. Bitcoin, the original and largest cryptocurrency, was developed in 2009 as an alternative monetary asset to the US dollar and other fiat currencies. Most investors view it as a speculative investment. Ethereum is the second largest cryptocurrency by market cap. It was designed as an innovative ledger technology to help companies securely transport data, store data, and build new programs and applications. Litecoin is a peer-to-peer cryptocurrency that strives to provide fast and low-cost payments by leveraging the unique properties of blockchain technology. It was created in 2011 by Charlie Lee, a former Google employee, who intended Litecoin to be a light version of Bitcoin, featuring many of the same properties as Bitcoin but lighter in weight. Since there are literally thousands of cryptocurrencies, you need to understand the investment case for each trade. Step 3. Set up a crypto wallet to safely store your cryptocurrency. Cryptocurrency wallets provide access to cryptocurrency and other digital assets. They may be online or offline. Software and web-based wallets are often referred to as hot wallets, while hardware and physical paper wallets are classified as cold. A hardware wallet is a physical device that stores cryptocurrency private keys in an offline, cold format. Crypto hardware wallets can connect to the internet to send and receive digital assets, but the default storage state is offline. A cryptocurrency software wallet is electronic and lives on one or more of your devices. Software wallets are hot when they are connected to the internet. Software wallets can be non-custodial, providing the owner full control over their digital assets. Web-based cryptocurrency wallets exist only online. They are not supported by any software or physical device. Web-based wallets are always hot and are usually custodial wallets that are controlled by a host platform. Your personal preferences determine which crypto wallet is right for you. Step 4. Choose a reputable cryptocurrency exchange to buy and sell your chosen coins. There are a number of standard factors to consider when choosing the right crypto exchange, such as the level of identification documentation required to sign up, trade limits, currency support, and trading fees. Choosing the right crypto exchange when based in the United States, however, places a few additional requirements on traders. In addition to checking for fee structures, security, and deposit or withdrawal methods, it's essential to ensure that an exchange is legally allowed to operate within your jurisdiction. Step 5. Research and analyze different cryptocurrencies to find the ones with potential. As you would for any investment, understand exactly what you're investing in. It is important to read the annual report and other SEC filings to analyze the companies thoroughly. Remember to always do your own research and never invest blindly based on others' opinions. Step 6. Determine your investment goals and the amount of funds you are willing to risk. It is important to avoid putting money that you need into speculative assets. If you can't afford to lose it, all of it, you can't afford to put it into risky assets such as cryptocurrency. Understand the risks involved in cryptocurrency investing, as the market can be highly volatile. Step 7. Start small. Invest only what you can afford to lose. Cryptocurrency is a highly speculative area of the market. The best advice is to start small and only use money that you can afford to lose. Keep your emotions in check and stick to your investment strategy, avoiding impulsive decisions. Step 8. Stay updated with the latest news and trends in the cryptocurrency market. Take advantage of market dips to buy cryptocurrencies at lower prices. Regularly monitor your investments and make adjustments if necessary. Understand the concept of market cycles, as cryptocurrency prices can fluctuate over time. Set realistic expectations and be patient. Cryptocurrency investments may take time to generate significant returns. Step 9. Diversify your portfolio by investing in multiple cryptocurrencies. Consider the long-term potential of the technology behind cryptocurrencies, such as blockchain. Blockchain is a type of shared database that differs from a typical database in the way it stores information. Blockchains store data in blocks linked together via cryptography. Consider dollar cost averaging, where you invest a fixed amount regularly regardless of the current price. Be mindful of taxes associated with cryptocurrency investing and consult with a tax professional if needed. Take advantage of educational resources, such as online courses and books, to enhance your knowledge. Follow reputable cryptocurrency experts and influencers for valuable insights and advice. Consider joining crypto communities to connect with fellow investors and gain their perspectives. Be aware of potential scams and fraudulent schemes in the cryptocurrency space. Take steps to protect your personal and financial information online, using strong passwords and secure networks. Always be cautious and skeptical of promises of quick and guaranteed returns. Stay informed about regulatory developments as governments around the world adjust their policies on cryptocurrencies. Seek professional advice if you are uncertain about any aspect of cryptocurrency investing. Remember, investing in cryptocurrencies involves risks, but also offers exciting opportunities for those who approach it with caution and knowledge.